I also wanted to chat with you a little bit about the Bitcoin Opportunity Fund. So tell us a little bit about this. As I understand, this is for high net worth investors. And maybe if you could help explain for people, I guess the common question might be, hey, why not just hold Bitcoin, right? What's the point of this Bitcoin Opportunity Fund?
Yeah, simply, I think everybody should own some Bitcoin, period. Like that's the first step. You should own some Bitcoin. And, and if you don't yet, that's where you should start, quite honestly. But as far as the why Bitcoin Opportunity Fund, on top of that, well, the Bitcoin network is going to grow rapidly in our opinion. Okay. So let's step back. First, who is it? I've got a number of partners. It's David Foley, who is Larry Lepard's longtime partner in his fund, and me are the managing partners. Then we've got Greg Foss, Larry Lepard, Mark Moss, and Corey Clipson from Swan. We're all partners in this, and but David and I are the co-managing partners. So we're managing the portfolio and the day-to-day and the investments. Okay, so that's number one. But our mission is, and we put together a little statement, and it's basically it's the Bitcoin Opportunity Fund helps high net worth investors who are seeking to generate higher risk adjusted returns, and that's the important part to your question. It helps them generate higher risk adjusted returns, diversifying into the Bitcoin ecosystem by focusing on both public and private opportunities. And so the point is that our goal is to deliver higher risk adjusted returns over a long period of time, 7 to 10 years. But we're investing only in Bitcoin ecosystem opportunities. And we are investing in both public and private. What's great about this, though, is that it's been rough out there with FTX, Celsius, the debacles, the fraud, on the mismanagement, the lack of risk management. There's been massive, fallout from that this last year, but that puts Bitcoin, who's been stung by that contagion, it puts Bitcoin in this opportunity set with distressed companies, the mining companies, some of the smaller ecosystem companies, payment companies, wallet companies. It puts them in this position of being distressed, where they don't have the capital to operate that they thought they did or they expected to have. And so they need that capital injection. And so this is a perfect time for us to come in and get some of these assets, some of these companies, some of these, Series B or even some Series A down rounds where they have to raise capital at a much, much, much lower valuation of the company, which means you get more equity for your investment. It's just it's good timing. And, we can help the ecosystem. We can help these companies. We can gather capital and help the companies that we believe have strong risk management, have strong entrepreneurial spirit and good leaders. And, with our network, we're pretty excited. We're super excited. And anyway, so anybody who's interested, you can find out more, you can find out more information, get more information by going to bitcoinopportunity.fund and just attest that you're accredited, and you can see our webinar and we've got a tape of it there, and you can get some more information. We're happy to talk about it. But we're excited. We're excited to do this. So it's a good time.
And just to touch on the public and private markets aspect. So I presume that could also potentially mean like even the public Bitcoin miners. And then on the private side, it could even be some of these, earlier stage Bitcoin companies. So presumably the idea is you believe, let's say you're bullish on this, Bitcoin company, and you think, hey, look, in 10 years time, it's going to be a big part of the Bitcoin ecosystem. It's going to be so much bigger. And therefore let's try to get some now. That's basically the thesis, right?
That's right. And so, but we kept it wide open in the types of investments we can do for that reason, because, the Bitcoin ecosystem is early stage all the way to later stage. The later stage companies are the public ones are mostly miners, right? And so some payment companies, but the things that we could do there is it's not just buying equity in the market. We could buy debt of some of these struggling companies that's trading pennies in the dollar. Know that even if they're unsecured, they have claims on assets that are big enough that it makes sense to buy that debt at these prices. And then what we can do is we can short some of the common equity against it in what we call a delta hedge. And that way we can manage that downside risk. And even if the company goes bankrupt, even if the company goes out of business, we can still make money on that trade. And that's the idea, is for us to lower risk with that ability to short. And so that's really important. And then the private side, going back to the miners, we can buy miners, the ASICs, for a fraction of what they were selling for just a year ago. And we can buy them out of bankruptcy proceedings, and we can get and we have strong relationships with power companies and places to actually plug these in a way that we're not just buying the power, but we're actually integrated with that company in order to align our incentives. And that's important. That's to protect ourselves from being unplugged or shut down because of the pricing opportunity of energy. So it's again, I think there's a huge opportunity here. We're super excited. That's about all I can really say about it publicly, but those are the types of things we're looking at. And we've gotten really strong interest and excitement around it. So this is
fantastic. Okay, cool. So, I guess final question, any thoughts in terms of the outlook over, let's say, short to medium term? I guess just looking at the macroeconomics of things, do you think we just they just try to kick along as much as things can, or do you have any view on whether the Fed really has to do this big about turn and pivot? What are you looking for there?
Well, I think that they're in a heck of a pickle, right? Because we still have inflation that's running hot. They can't let inflation run out of control, because that would destroy confidence in the U.S. dollar and then the Treasury. They can't let that happen. So they don't have a tool to protect the Treasury if that happens. However, they do have tools to protect the Treasury and the dollar if they tighten too much. And that's QE, quantitative easing, printing money, monetizing bonds, injecting liquidity into the markets to spark it and to, regenerate some economic activity. And they can lower rates in order to do that. And so those tools allow them, back to the money printer, allow them to do this. So what do I think? I think that the Fed's going to continue to tighten. I think they're going to raise, unless something happens between now and next week, they're going to raise another 25 basis points. And then I think if we get at least some positive movement in the CPI number, which they manipulate, we know they do, but if we get it to the point where it looks like it's coming down closer to that 4 or 5% level, then they may just back off and say, okay, now we're at a rate that is above the neutral rate, which means that it's tightening policy, it's tightening the screws on the economy. And so if we hold the rates here, the economy will continue to slow. And so that's what they'll do. However, I think I think they're looking so far in the rear view mirror that we're not even seeing the effects of the, rate raises two meetings ago. So we're just now starting to see the effects of those. And you're going to start seeing it in the housing market. You're seeing it in jobs. You're seeing it in the wages aren't keeping up. So it's going to be, I think it's going to be a rough ride, to be honest, through the rest of this year. And we're going to hit a spot where we're in a recession, and then the Fed will have to pivot. When that happens, I don't know. At this point, I would have thought they'll pivot and start lowering rates early 2024, but it may be 2023 now with what we've seen in the banking And, with that pending crisis. And it all depends on what happens next. We're not out of the woods yet on that. We're not quite out of the woods on that. So I'm watching closely. But, I'm also, adding opportunistically. Bitcoin if it gets crushed and it goes back under 20,000, I'm adding, I'm also adding to gold and silver just because I'm a risk manager, but I add physical, either in vaults or in ETFs that are audited with the right amount of gold or silver in their vaults, as claims against those ETF certificates. So, I just caution people. I think that it's going to be a rough ride. That's my personal opinion. And that's just it's all a probabilities game. And I just think there's a higher probability that we go into a recession than there's not. And so, that's kind of my outlook right now.